Please subscribe my channel Trending Information Videos.
Good afternoon and welcome to Stock Market Today. We are live from the Investors Business Daily Studios in Los Angeles. It's Monday, January 27th. It's Justin Nielsen along with Ed Carson. And Ed, on the show today, we'll be talking about a few stocks that held up decently in this downturn, but some that didn't. Yeah. So, but first, let's take a look at the major indexes. We had the S&P 500 down 1.6%, NASDAQ Composite down 1.9%, the Dow Jones Industrial is down 1.6%, and it looks like the Russell, which was tracking the best for most of the day, was only down 1.1%. So it did end the best, but overall, there was a lot of destruction out there. So what was going on? Coronavirus was a big factor.
Yeah, I mean, you could see it happening over the week in the futures. Coronavirus, much more out there. But you could also argue we were due for a pullback. I mean, so you can read about the coronavirus in a lot of places. But here's the NASDAQ Composite. And actually, if you look at the sort of a purple line up there, the NASDAQ closed below its 21-day moving average for the first time since early October. And that's just something to be watching for. I mean, actually, it's been hugging its 10-day line most of the way up. Right. The S&P had its first 1% move either way since like mid-October. It's been a very gradual, but it's been very steady, but measured, constantly moving up ascent, and that sort of faded today. So we'll see how that goes. You could argue with a pullback. The Dow is near a 50-day line. The NASDAQ is still a little ways away from the 50-day line. It wouldn't be a shock.
Right.
There is sort of a channel we've been trading in, and the NASDAQ is sort of at the bottom end of that channel, basically tracking sort of with the 21-day line, or around there. So it'd be nice if we could hold in that area, but we may not, and you have to be ready to deal with that.
Exactly, ready for either way. Because again, this could just be a blip. I mean, overall, this has been a really nice rally. I mean, we had over 70 days where we were tracking above that 21-day moving average line. I think you have to go back to like 2006 to see almost a similar move like that. But we really kind of started to see that kind of change in behavior on Friday with that reversal, and things, we don't know how far down it's going to go, so you kind of have to be ready for anything here.
Yeah.
Let's talk about a few stocks that, in terms of being ready for anything, so Alibaba, of course, that's got Chinese exposure, retail. That was one of the big losers today, but not so bad in terms of where it was in relation to its lows.
Yeah, I mean, so it's hard to measure right now, but the thing is the stock is down below its 50-day line and the 10-week line, so you want to see if it can get back above it or at least hug that line by the end of the week, because it's sort of a strong sell signal if you go down pretty sharply and measurably go below the 10-week line. But did close off lows. There was a lot of China stocks that sort of rebounded off their lows. Not all of them, but a lot of them did. And so that could be something. And we're probably going to get some news in the next hour or two from China about, hey, what is the new tally on confirmed cases? What's the new tally on the death toll in China? Because all the deaths so far have been in China. To get some sign, is it spiraling out of control? Are they reining it in, or is it sort of continuing to get worse and we don't really know, which is probably what we'll get for the foreseeable future. But so that's just something we have to look at there. It's not great action. Not the worst either.
Yeah, and this is why a lot of times you have to be very careful of when you see this news and you see the futures diving, you don't necessarily want to be the first trade on the ticker, because you could end up getting at the very bottom, and that was really the case for a lot of these stocks. Now on the flip side, you had some stocks that were really kind of bucking the trend, and ITB, which is the iShares U.S. Home Construction ETF, that was actually flat for the day and didn't look too bad. It was actually positive for a good portion of the day, too.
Yeah, I mean, this one has a lot of this as an ETF. This was one way to avoid some of the stock-specific risks because, there's a lot of home builders that have earnings this week. You don't know which ones are going to do well and which ones are not, and they can be squirrely at times. D.R. Horton, which is actually the biggest holding in ITB, that one did very well today. It rose. It's extended, though. A lot of these stocks are extended. It also has Home Depot in this ETF, so it's a little diversified in that regard, and Home Depot is setting up. But it's technically at the very edge of a buy zone from a flat base, though. You could arguably say maybe it should come back to the top of the buy zone. I mean, maybe the 21-day line, which I don't know if it's sort of pictured there, or basically just above the buy point, because ETFs are something often you may want to buy more on a pullback rather than really try to buy, especially that far from the buy zone. I mean, though you could, but if interest rates bounce back. I
Yeah.
mean, that's been something that's really helped in the last few weeks. I mean, interest rates have been low for the last several years,
Right.
but interest rates have really tumbled on safe haven flows.
Yes, and if you look at kind of the overall trend of just like the 10-year treasuries, I mean, it's been in a pretty significant downtrend, just looking at the yields.
Yeah.
And so, of course, that's one of the things that's kind of helping the home builders, a lot of those, and of course this ETF. Now, on the flip side, again, we kind of looked at BABA, which recovered pretty nicely. We looked at ITB, which was never hurt too much, but then we had Solar Edge, which ended at its lows and just really, frankly, looked terrible.
Yeah, I mean, we looked at this during IBD Live, and we were looking at all of these stocks during IBD Live, and during IBD Live, it was down about 6%, which is pretty heavy, but, it was still well above the, where the buy point was. Man, it came down hard. It closed right at the lows. Thing is, you probably would have wanted to sell this, if you had bought it on the breakout, because honestly, you were, at best flat and probably down a little bit, and you don't want to see like a 10, 15% winner turn into a loser. That's one reason why maybe you take partial profits along the way, in part because of then if something like this happens, if you get caught, you can still get some kind of a gain. There might be various factors. Oil prices are tumbling on the coronavirus, fears, concerns about demand. Natural gas prices, especially here in the U.S., are down. I mean, maybe there'll just be slower production in China for a while with the economy or installations. There was also a downgrade, but for whatever the reason is, not all stocks are going to bounce back. I mean, just because the market closes off lows doesn't mean your stock will close off lows. Sometimes yours is the worst one.
Right,
the
exactly.
one. I mean, sometimes it'll have a great day and sometimes it will not. And this one is just, that's what's happened here today.
Yeah, and the energy sector was the worst out there. I mean, that was definitely a very hard hit. And so when you're looking at the worst sectors and then you look at the worst stocks in those, that's kind of one of the things we talked about on IBD Live today was whether or not you're looking at your portfolio and deciding which ones you're going to cut. Sometimes the best way to do it is, okay, what's up the most? What do I have the most cushion on? Or for the day, which ones are not keeping up with the market, which ones are the worst off in relation to the market. So there's a lot of ways that you can kind of do that trimming. With BABA, you might be able to get away with waiting for a little bit because it's just below its 50-day moving average line. Sometimes we do like to wait, give it a chance, but you always have to have that line in the sand and those exit strategies, something important going forward here.
Yes.
Yeah. Okay, that's going to do it for us today. A couple things to keep in mind. We do have IBD Live, that something that we've been talking a little bit about. That's something that you can join us at any day. Free trials are available at investors.com/IBD Live. We start 10 minutes before the market open, and we go a full hour into the trading session, kind of talking about what we're seeing. Today we were kind of warning folks, hey, don't be the first one to trade. Let's wait and see how this pans out, and that turned out to be a good thing with the markets recovering pretty quickly. Of course, they didn't recover all the losses.
Yeah, we didn't say necessarily you don't sell or don't sell some of things, but maybe not in that first few minutes. And we try to walk through it and talk about hedging strategies and portfolio management, because often we're talking about actionable stocks, not a whole lot of actionable stocks today to be buying. Not a great day for that, but it's definitely, we're going to walk through that and discuss, look at some of these stocks and what you should be doing, and just in general. I think it's a really useful tool. It's obviously in good markets, but also in, situations like this.
And we were talking about, hey, what you might do is if you're going to be lightening up, wait for that little bit of a rebound and take that opportunity to start lightening up. So that's something that definitely worked out well today. And you can also engage with us on social media. We are on Facebook, we are on Twitter, we are on Instagram and YouTube, and that's a great way to kind of keep track of investors.com, all of the things we've got going on here, and some of our analysis going on throughout the day with articles and different comments from, friends of ours like Ed Carson here, who has a very active Twitter feed. Very good to follow that. So thank you very much for joining us today, and we will see you right back here tomorrow.